Most people who quit becoming a mortgage broker, they actually quit for the same reason. They just don't know it's actually this reason. They'll tell you the qualification beat them. They'll tell you the industry is just brutal. They'll tell you it wasn't for them. They'll quit during CMAP in year 1, sometimes much later on, might be in year 3, just before the money was actually about to land. And they'll all come up with a completely different story about why they did it. None of those stories, by the way, are true. There is one reason and one reason only that this career chews people up and spits them out. And once you can see it really clearly, you can plan around it and you'll never be one of those again. So in this video, we are going to do an honest investigation into where this career actually gets hard, the difficulty really feels like, and the one specific thing that separates people who make it from the people don't. I want to be straight with you about one thing that nobody on YouTube wants to admit. Because if you don't hear it now, you'll learn it the hard way later on. The through line through this whole video is one sentence. The job isn't the hard part. The 18 months between qualifying and earning real money, that's the hard part. Almost everybody who quits inside that window. So hold on to that, and this rest of the video is going to make complete sense. Picture this, it's Tuesday evening, the kids are in bed and you've had a long day. The CMAP textbook is on the kitchen table where you left it on Sunday and you haven't opened it in 9 days. You promise yourself you're going to do an hour after this episode of whatever you're watching on TV is done. But you don't. And that moment, that exact Tuesday evening is where almost all CMAP failures actually happen. Not in the exam room, on the sofa. Because here's the truth about CMAP that the training providers will not tell you. They're not going to plaster it on their website. It's not academically hard. It's not university level of qualification. It's not a finance maths degree. People from every single background pass this every single year. Postmen, hairdressers, plumbers, single parents, around 3 kids, people who left school at 16, people who haven't sat an exam in 20 years. But it's broad, and you've got to find 3 to 5 hours a week, every week for about 4 to 6 months while still doing your day job and your life. Logistically, that is a challenge. Emotionally, the challenge is showing up on the Tuesday when you don't really feel like it. People who pass, they're not smarter, they're just more disciplined. They booked the exam date before they ever felt ready for it. They studied a bit every day rather than cramming it all in on a Sunday, and they took mocks under time conditions. They also didn't push the exam back because they felt nervous. The people who fail are the ones who keep telling themselves they'll study properly next week. The next week, though, is never ever going to come. The textbook stays shut, the exam never gets booked, and eventually they tell themselves, see, that was just really hard, I can't really do it, when really the thing they're describing is a 6-month relationship with their own discipline. Now, let me be straight with you on this one for a second. If you have been thinking about starting CMAP for the last 6 months and you still haven't booked it, you're not doing research. I love it when people say that. You're avoiding it. The qualification isn't what is going to cost you. The decision is. Zone 2 then is the competence zone. You've passed CMAP, you've landed your first role, and within a fortnight you feel like a complete fraud. That is the competence zone, and it runs from the day you start advising to roughly kind of month 9 to 10. And it's the period where confidence collapses faster than your knowledge can actually build. 3 things are happening all at once, and they compound on top of each other. First thing is, you have to learn the lender criteria, which lender takes what type of income, which one hates self-employed, which one ignores defaults over 3 years old, which one will lend on flats above shops. There are over 100 mainstream lenders in the UK, and they all have really little quirks, and almost none of them, in fact none of it, is going to be in your CMAP exam. You'll learn it on the floor, one case at a time. The first 6 to 12 months, they're going to feel like trying to drink from a fire hose. The second thing is going through competent advisor status, which is called CAS. And this is where every case that you write gets pulled apart in a file check by a senior broker. The feedback feels personal, feels direct, like an attack, but it isn't. The file check is doing the job that it's designed to do, catching things you didn't know you didn't know. But for a lot of new brokers, having their work corrected for the first time in years feels like proof they're just not cut out for the career. But they're not getting that single no, they're getting growth. They just can't tell the difference yet. And the third thing is you're sat across from clients who are older than you, richer than you, more experienced in life than you. And they are asking you for advice about the biggest purchase in their lives. They trust you because you're qualified. You secretly think, though, they have no idea that I've only learned what a buy-to-let was only 6 months ago. See, that is imposter syndrome, and it is the soundtrack of the competence zone. Now, here's what almost no one is ever going to tell you. Every single broker felt this. The The ones who survived, they didn't stop feeling it. They just did the job anyway. You don't feel confident, then you advise well. You advise well and you watch it work. Then you start to feel confident. See, action first, feeling later. Anyone waiting to feel ready before they sit with their first clients will never sit with their first clients. Now we come to it, the actual graveyard of this industry. This is where most of the careers in this industry end before they've even really properly begun. And it's the zone almost nobody warns you about in the way they really should. Here's the picture of this one. You are somewhere between maybe month 4 and month 18 of your broker career. You've passed your CMAP, you've reached CAS, or you're maybe even close, and you started writing real cases. You are getting better. The job is starting to feel kind of doable. And you're earning almost nothing. If you're employed, you're on a small basic with a tiny commission while you build your numbers, maybe 22 to 25 grand. If you're self-employed, you might genuinely be earning like low 4-figure months, sometimes less, by the way, because your lead pipeline hasn't matured yet. You are working harder than you've ever worked before in your life, and you are being paid less than you were at a job that you left before to do this. See, that gap between effort and reward, it is the thing that breaks people. It isn't the job, though. It isn't the clients. It isn't the qualification. It's looking at your bank account in month 8 and asking yourself, what if I've made a massive mistake? Now, here's the brutal bit. You see, most people quit precisely at that moment, the wrong moment. Pipeline in this industry matures around month 12 to 18. The very point most career switchers actually run out of money and then they quit is usually the point where the income would have started climbing if they just held for another quarter. They were 3 months from breakthrough. They just never really knew it. And this is where I bang on about preparation. 6 months of living expenses minimum before you go self-employed. Realistic expectations about what year 1 for employed brokers should be, and a clear plan for your first 30 clients and where they're going to come from. Not because brokering is risky, by the way, but because the 18 months between qualifying and actually earning any real money is the only thing that actually kills the careers in this industry. And it can almost be entirely prevented with planning up front. See, the brokers in that graveyard, they didn't fail at being a broker. They failed at surviving that gap that we talk about. What people say they quit for versus what they actually quit for are completely different. So let me give you the rank in order of why people actually leave this career in honesty. Number 1 is they ran out of money. By the country mile, this is the biggest one. Didn't save a runway, underestimated how long the pipeline was going to take, and they panicked and they went back to whatever they did before. Often worse off than they'd ever tried. Number 2 is they couldn't carry the imposter feeling. They internalized the early career discomfort as proof that they weren't built for this. They were wrong, but they quit before they got the chance to actually find out. The third one is they pick the wrong firm. Bad principle, no training, no support, no leads. Some people I've seen quit brokering should have changed firms, really. That would have been the fix. Number 4 was they were looking for an easy ride. They came in expecting to make 6 figures in their first year, working 3 days a week, and the reality landed and they left. Small group, honestly, but it is a real group of people in that one, sadly. See, notice the pattern here. None of these are the job being too hard intellectually. Every single one is just preparation, expectation, or money. Every one of them is preventable if you see it coming. That's the whole point of this video, to make you see it coming. See, the brokers I see who thrive past year 3 share 4 specific traits, not skills, traits. They're financially prepared. 6 months of expenses minimum, like I said, before going self-employed. They never panic about money in year 1 because they plan for year 1 to be lean. They ask for help. They don't pretend they know things they don't. They ask senior brokers. They ring the lenders. They look things up. They treat not knowing as a temporary state, not a permanent identity of themselves. They reframe sales as a service. They don't apologize for the job, and they believe the advice they're giving genuinely helps clients. And that selling protection is part of being a real advisor, not separated from it. The brokers who carry guilt about being in sales, they're never going to make any real money with this. The good ones, though, they show up consistently. They don't have great weeks and dead weeks. They have the same week, every week. Diary blocked, calls made, follow-ups done. The work is unglamorous, and they do it anyway. Discipline beats motivation every single time. That's it. 4 traits, not talent, not charisma, not a posh background. Anyone watching this can build all 4 of these if they decide to. And the decision is the bit, not the building. If you're watching this and you're thinking, I get the difficulty curve, now I just want to know what happens once I'm through the worst of it. Well, that's the next video you should look at. The next one to watch is right here on the channel right now, Protection Sales for Mortgage Brokers, and it's a complete guide because Once you're through that year one, protection is the single thing that determines a 60 grand broker versus 140 grand broker for the same number of cases. And it's the skill that separates the survivors from the thrivers. And most brokers, they never master it properly. So watch that one, hit subscribe, and I'll see you there.